Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Hi, this is your weekend update for Monday, November 21st, 2016. We're covering the crude oil futures market, so let's take a look at the monthly chart. On the monthly chart, we've been in a downtrend, 5 waves possibly, and now we're in a corrective mode. A closer look, we can see that we're in an 8-month balance here, and that the price peaked out of balance, and when that happens and comes back into balance, generally the target is the opposite side of balance. Now, this is interesting here that we left quite a large tail on this month, and this month is halfway over. So it'll be very interesting to see how this month closes. If it closes with this large tail down there, that would be a higher low, and we would expect prices to break these highs. On the weekly chart, you can see that we've respected this Andrews pitchfork, and on this particular week, it reversed without coming down to this pitchfork here, so that is showing some relative strength. So you have the one argument of higher highs and higher lows for it to continue higher, and you have the other argument of it breaking out of range, coming back into, and the target would be the opposite side of range. We've had 3 weeks down without a pullback, so we're getting a pullback now. Bottom line is that we're trading in a range. We are in balance, and we should treat it as such. Currently, we are in a very comfortable area for the market. This is the high volume node of this trading range. We had a trend here, which broke trend here. Now we have a low and a high. And basic Dow theory is if it breaks this high, we're continuing the uptrend, and if it breaks this low, then we've started a new downtrend. There's nothing saying that this range couldn't continue for weeks, months, or years. And very basic, typical price action is you have a spike up, that spike turns into a channel up, and then that channel turns into a trading range. You see that on all time frames. I think that it's interesting that it broke this trend line, came down and kissed the underside of that trend line. It'll be interesting to see what it does here, if it can break this trend line to the upside, or if that bar right there is an indication of a continuation of the downtrend. When trying to decide how to draw the Andrews pitchfork lines, are we in an uptrend or are we in a downtrend? Is the flow going up, or is this the angle that the flow will be going down? So on this upward trajectory, it has some support here. This would be where we would find resistance to the upside. And if we drew it from out here and down to here, you can see that's where we found resistance. So do we still have a downflow, or is it an upflow? Well, I'm going to have this high tell me whether this is an upflow or a downflow. If it breaks this high up here, then I'm going to be looking on getting long. If it can get below this consolidation here, then I'll be looking to get short. And just a closer look at that, if it gets above this high, which would break this median line here, then I'll look to be getting long. And if it gets below this consolidation, this balance area here, then I'll be looking to get short. A little bit of a confusing picture on the market profile. Thursday it opened here It spiked up, tested higher, got rejection, a little bit of a selling tail here, and it closed. It spiked down here and closed close to its low. The next day, it opened right where it closed. They got acceptance down in the spike. Generally, that means prices go lower, and they did, but they turned right around and closed near their high. That's all that tells me, is that it's very comfortable in this area right here, and that's why we call this balance. So I think that if the price gets below, say, 44.90 or above 47, 10 or 20, those are the areas that will give us a clue in what direction it wants to take off from this area of balance. And of course, all this could change with news and fundamentals. This is a 30-minute chart. I'm not predicting which way it will go, but if it does break these highs, it breaks below 45. In either case, there is not a lot of structure to keep it from moving quite quickly. Again, if it breaks these highs here, there's not much structure here or here, so it could come all the way up to 49 if it breaks 47, and if it breaks 45, it could come all the way down to 44 very easily. There, again, not a lot of structure there. Well, that's what I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter, and you can have videos like this sent directly to your inbox. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.